In this video, I'm going to talk about 3 crypto assets with fundamentals that you can invest in right now. One of them, I'm up already over 100%. And really through these assets, you're going to get insight into how I invest as someone who runs a crypto investment consultancy, as someone who runs multiple 6-figure portfolios under different strategies simultaneously, and as someone who has been nonstop crypto focused for the last 8 years. Now, I am not a crypto influencer. I'm a lawyer. I used to work with the top digital assets law practice or law firm in the country in Canada. I was the band 1 ranked regulatory practice, meaning the top regulatory practice in the country. I worked on crypto ETFs. I worked with regulators like the OSC and the SEC. I worked in-house with certain crypto exchanges. I informed them and did research for them about what crypto assets they could and could not list. I worked on crypto asset issuances for our clients and a bunch of other stuff. And after blowing up my portfolio from 5 figures to 7 figures, I left that law practice to start a crypto investment consultancy, which I still do to this day as the CEO. Right now, we provide analysis and research for about 1,000 higher net worth investors, and I run a team of 40 full-time researchers, analysts, and supporting staff who all just focus on our customers and the crypto market 7 days a week. So let's talk about 3 lesser known AI agent protocols with assets that have low valuations that could easily 20x this cycle, which would be like a 2,000% gain. And 20x assets are not the most important thing in crypto investing, but by talking about these types of assets, I can explain what is most important, which is fundamentals. So for the assets, let's take a look here at Loomlay. We've got a 4.4 mil market cap, fully diluted valuation is 8 million. Now the price is 17 cents, but of course the price isn't important. All we care is market cap. Over the last 3 months here, we can see a bit of a flatlining chart. So what is Loomlay? Build AI agents without limits. So Loomlay is a platform that developers can go to build AI agents. Now, why does the marketplace want AI agents? Well, you can think of AI agents as like little companies. They connect with software tooling. You give the AI agent a goal and it goes off into the internet to accomplish that goal. So for example, I could say, go find me the cheapest software provider for video recording software, and then subscribe to it, and then integrate that into my company's Zoom calls. Now, usually I have to employ and pay someone to do all that work, but because it's all internet-based stuff, an AI agent that is properly enabled can just go do that and achieve the goal that I give it. And so Loomlay is building a platform that devs can build agents like this upon. And crypto is in the mix because AI agents that have control of a crypto wallet, which is also just software as compared to a bank account, which is not. AI agents that control a crypto wallet are much more powerful. They're much more capable. For example, they can do economic transactions as compared to an AI agent without a crypto wallet, which could only do research. It couldn't actually take action on the conclusions of its research. Now, Lay is the crypto asset, and it's needed because when it comes to building agents on Loomlay, the builders of the protocol have made Lay very integral. When you want to build an agent, you need Lay. When you want to invest and trade an agent, which you can do, by the way, because again, you got to think of these things as little companies. And so you can tokenize these little companies and you can trade and sell them. And when you do that, you need Lay as well. Now, Lay is built on the base network, so it's EVM compatible. It's not some crazy layer 1 that is really difficult to get. You can get this thing right now. It's on an extremely popular network already. And this platform is for building AI agents on the base network and on EVM compatible networks. Now, right now, over 200 agents have been built on this platform. Of those agents, it seems that 192 of them have been tokenized in ownership, and you can trade and invest in these AI agents. $8 million has gone into trading. So people have been trading these agents, and there's $8 million of trading volume. And we see here that there's 17,964 token holders. Now that maybe sounds like a lot, but you need to remember there's about 400 million crypto investors globally. 17,000 is 0.01% of crypto investors. So this is definitely an under the radar asset, which you can see with the market cap, like 4 million market cap. Now, we can see here that total revenue is only 62,000, which of course, that's not very much revenue. But the key thing here is that this is a project that is only a few months old and it is making revenue. And this is before it has been discovered by the market and while the market demand is still being built out. So what I see here is a working business model that is making revenue, where that revenue is connected to the crypto asset that we can invest in. As a fundamentals investor, this is the stuff that I like because I can put my money into assets like this and hold. This is what some other people have been saying. Loomlay is a better alternative to virtuals, no-code agent builder, supports 13 models including DeepSeek, supports 18 plugins. They generate 0.01 ETH in revenue per agent creation. Loomlay collects 1% free. Great tokenomics. Started noticing Loomlay AI a few months ago. One of the few teams that's actually been shipping nonstop through the downturn. They recently built a co-pilot for Zerion wallet. While most played dead during the chop, Loomlay AI kept showing up. I recognize a solid project when I see one. So maybe this is a good time to ask you guys to subscribe to my channel. My consultancy believes 100% that business is going to continue moving on chain and the best investment opportunities of the next decade are going to be on chain. And so we're not doing some crazy technical analysis looking at the price charts, the 4-minute chart, the 4-minute bars all day. We take a principled value investing approach to this asset class and invest in good business that can have very high multiples because of how early we are investing in these assets. And so if you want more of this, just give me a signal by sending this video to someone who wants less hype and more fundamentals in their crypto investing. The second asset is OpenServ. So this is the 1 month chart. You can see we've gone from about 2 cents to about 6.5 cents, we'll say. Market cap, 39 million, fully diluted, 57 million. Again, this is nothing compared to the $1 trillion, $100 billion assets that we're seeing at the top of CoinMarketCap. These are relatively quite small, undiscovered, unrecognized assets. Now, what is OpenServ? Well, OpenServ is at first seems a bit like Loomlay because it is something that helps you build AI agents. But Loomlay, you could think of like a Shopify. It's kind of easy to use, top layer. OpenServ is more like an AWS. It's deeper, it's full stack. It's what you would want to do if you want to build a business rather than say a specific product for AI agents. You need to be a bit of a better and more capable developer to be using OpenServ as compared to Loomlay. Loomlay is more suitable for companies who are just looking to build AI agents in the crypto layer, and OpenServ is more suitable for guys who are looking to build AI agents who cross Web 2 and Web 3. Now, Serv functions very similar. You need to use the asset in order to take advantage of the OpenServ platform. We can take a look here. Serv unlocks agents and features. When you use the protocol, it burns Serv, so that reduces the supply. And if demand stays constant or increases, that makes the price go up. Platform fees fund buybacks and more burns. Agent builders get rewarded more usage, lower supply. So a bit similar to how Loomlay works, but a bit more of a buyback and burn mechanism. This is not the ideal tokenomics for me. I like just straight revenue share. It makes a profit. That profit goes to the holder of the crypto asset, a revenue share or profit share crypto asset. That is by far my favorite rather than this ecosystem type play. But what I do like is something that is building a service that is in demand by the market. That is the fundamental type stuff that we like to invest in. So OpenServ, the future of AI agents is here. Here's our roadmap. Q1 launch, Q2 acceleration, Q3 hypergrowth. You can come to their X profile and take a look here. I won't go through it in detail. Serv is my biggest AI agent bag. Check this roadmap. Be ahead of the game in this narrative. Again, we're seeing some success here with this protocol, and it's delivering a service to the market that the market wants. And the market cap is just not very high as compared to a lot of stuff that we see, crypto assets that are 5 years old, who have produced nothing, that are not in demand by the market and have multi-billion-dollar valuations. Finally, let's go take a look at Coral Protocol. So this is over the last 3 months. It's come from 0.0002 cents to 0.0029, so a 10x in the last 3 months, still only a 31 mil market cap. So it's gone from 3 mil market cap to 31 mil, fully diluted, 31 million. This is nice, right? That's what you want to see. So off the hop, as compared to OpenServ, which is chain agnostic, the token is on Ethereum, but it's designed to integrate with multiple networks. And compared to Loomlay, which is on Base and EVM compatible, Coral is Solana. So that's already something that's different and interesting about it. So what you'll notice about Coral is that if you come to the website and you go build with us, it takes you immediately to the code, immediately to the GitHub. So Coral Protocol is you really want to be a bit more of an engineer or a dev to be using Coral Protocol. It's the least user-friendly of the three, and it's the most minimal as well. And I know I've been talking about you need to be a developer to use this. It's AI agent infrastructure. But what you need to keep in mind is that when you look at the traditional commercial market online, like e-commerce or service providers to help businesses do business online, there are tens of thousands, if not hundreds of thousands of service providers that collectively constitute the online economy. And so don't roll your eyes or be a bit bored that I'm talking about 3 different infrastructure plays. There's going to be a lot. And that's the sign of a healthy, dynamic economy. And so each of these are adding in a different way to the infrastructure that's being built, and each are worthy of your interest and research. Now, what does Coral Protocol do? So you could think of Coral Protocol as trying to be the TCP IP layer for AI agents. So TCP IP for the internet is very core, very back-end infrastructure upon which lots of other layers are built on top of and rely upon. Coral is something similar to that, but for AI agents. So AI agents need Coral, the asset, and by paying Coral the asset, they're able to register to the protocol, which then makes them findable and usable by any other AI agent that is also on Coral Protocol. So just like how if I want a website and I want that website to be found by customers, I buy a domain and I register my services to that domain. Similar here, I have an AI agent and I want it to be discovered by other AI agents so they can do commerce together. I would register it with Coral, and I would need to pay a fee for that service, and that fee is paid with Coral Protocol. Now, what's quite interesting here for Coral is that the team has 5% only. Now, this is pretty rare for crypto. 5% with a 3-year vesting schedule. That means that if this project does not succeed, this team is not getting paid. These guys, their interest is completely aligned. This is really impressive. Usually teams give themselves 25, 30%, and it vests in 3 months. These guys, 5%, 3-year vesting. That's quite impressive. Another thing to note, the white paper for this protocol just came out on the 30th of April. This is a very new protocol. And this is the engineers and the teams behind it. Over a decade of AI experience, multi-agent system and simulation experience, X-Agent AI and Camel AI. The team is quite engineering focused and decently stacked. I don't know how else to say it. What other people are saying online, I've been searching for high quality utility projects on Solana. I think it has great potential. The project name is Coral Protocol. The whole team is docked. The narrative is strong. Not many people are talking about it yet. The active team is pushing videos of them talking about the project, showing the product. GitHub just is starting to get listed on offshore centralized exchanges. Now, again, just because what I'm talking about is all AI agent protocols, don't try and think that this is all the same and I'm just talking about different options of the same thing. It's sort of like hearing about internet companies in the 90s and thinking, oh, another internet company, they're all the same. There's serious depth being built to this technology and this infrastructure, and you can choose if you want, but the idea that each of them could be invested in and get some of your consideration is a workable thesis. And that's why I'm focusing on this and explaining it to you, because this is where the future is going, and it's my job to know, or to at least make estimates of where we're going. So how should assets like these go into your portfolio? Well, I would say assets like these, each of them should be a maximum of 2.5% of your portfolio. So 7.5% total, and that would be a lot. Now, the nice thing about assets like this is that they can have a very big return. So 20x on Coral, that's going to be 600 million market cap. In comparison, let's take a look at these charts. 300 billion market cap. XRP, useless, 143 billion market cap. Dogecoin, useless, 33 billion. Cardano, useless, 26 billion. This to do a 20x is only 600 million. For this to do a 20x, 800 million. For this to do a 20x, 80 million or 100 million. So if you were to have, say, $500,000 in your crypto portfolio, agents like these constituted, say, 5%, and blue chips and mid caps constituted 80%, 85%, we'll say, and then stables 10%, stable coins, cash 10%. And if we take into consideration that the price targets for this cycle from guys like CZ, the CEO of Binance, who is typically not a guy who exaggerates, he's saying 500K to 1 million for this cycle. If we can dial that back and just say maybe 300K, we'll say that blue chips and mid caps will 3x their price from here. Well, your 500K portfolio that does a 3x on blue chips and mid caps and a 20x on just that 5% of AI agents, well, you end up with 1.85 million by the end of the cycle because your $25,000, your 5% that you had in agents, well, that turned into 500,000. Now, when I'm talking about assets like these, don't just go and sink your money into assets like these. The smaller the asset, the more volatile and the more that can change with it. The CEO can quit. A competitor can spring up, the underlying network can lose popularity. There's a lot of things that can affect the fundamentals of a protocol, a project, a service like this. And that's the way it should be. It should be just like the normal business environment. That's why investing in crypto assets like this is generally a young man's game. They have the time, the energy, the IQ, and the passion for staying on top of this market. These are like the guys that I hire in my consultancy. If you're watching this and you don't have the time, but you have the IQ, an intelligent decision might be to reach out to us and see if we can help you, because crypto is the highest returning market without question. If you've been in this market for a few years now and you haven't turned 500K into 5 million, despite Bitcoin being up over 20x since its lows in 2020, you need to ask yourself how much money your procrastination is costing you in trying to figure out this market. So if you enjoyed this video and you want more AI agent analysis, please let me know by commenting below. If this was a bit too advanced and you want more beginner-friendly material, let me know by commenting below. Thanks.